Hello, everybody. Thank you for joining us today for our ongoing series on crowdfunding or investment crowdfunding. Today, we have another very important topic that will impact both issuers, platforms, and investors. It's all about community and community before a securities offering, during and after a securities offering. And once again, we've got a group of experts here, and I'm going to ask each of them to introduce themselves and explain a little bit about what they do. And I'm going to start with the person who's on my right, Michael Knox.
Great. Thank you, Andrew. Just a little background on me. I'm currently the CEO of Lustro, which is a platform to help founders maintain relationships with their investors post-raise. A little background, I spent the first 16 years of my career as an institutional portfolio manager in New York. I managed a few mutual funds and was a partner at a hedge fund where I ran a convertible arbitrage strategy. I then founded a legal tech company that had a team of lawyers who basically went through financing documents and created cliff notes of the key terms and covenants. We sold that as a subscription to hedge funds, investment banks, and law firms. We sold that company in 2010 to the Financial Times. And since then, I've been an active investor and very active in the Reg CF space. I'm really supportive of investor rights and think that the industry could do a better job with communicating with investors. I think it's really important. And I've been both on the investor side as well as on the founder side. So I do understand the pain points from the founder standpoint as well. But we're hopeful that we can help bring investors and founders together and have a solid relationship throughout however long they're together.
Awesome. Thank you very much, Mike. That's very helpful. We're going to go on to Abi Shah from Republic. Welcome.
Awesome. Thank you guys for having me. So as a quick introduction, my name is Abi. I'm a director here at Republic. I've been with Republic for about 3 years. And for those that are not familiar with what we do, while we do have a crowdfunding division as one component of our business, we are a global financial platform. So we have expanded outside of the US into the UK, as well as other markets that are looking to come out in the future. Overall, my role stems across a variety of different components within Republic. So I sit across our retail marketplace with our diligence, as well as our investment team and operations. But in short, we work very collaboratively to try to find where companies could fit within the investment crowdfunding space and see how whether we can help them through that side or if there are other channels that make the most sense for them. So excited to be here and talk a little bit more about my experience and see how we can help out.
Awesome. Thank you very much, Abi. We've got two people from Dalmore today, and we're going to start with Dawson. Please tell us a little bit about yourself.
Yeah, absolutely. Excited to be here. So I am a managing partner on Dalmore Technology. So head of product, really focused in on user experience, user design, just the entire experience for the issuer and the investor combined. I've been working on the technology side for about 3 years now. But prior to that, come from a marketing background, had a marketing agency focused in on the Reg D, Reg CF, Reg A space. Got to the point where we built a great relationship with Dalmore and ended up just becoming a part of Dalmore. So I'm really still focused on the technology, but also working on issuer marketing and then internal marketing as well.
Awesome. Thank you very much. Stormer.
Yeah, thanks everyone, and great to be here. My name is Stormer Santana. I'm the Director of Sales at Dalmore Group. So just following off of Dawson, Dalmore, broker dealer and technology provider for issuers to raise capital online, hyper-focused in Reg CF, Reg A+, and Reg D offerings. I'm Director of Sales, so I'm chatting with founders on a frequent basis, understanding capital needs, understanding what the actual initiative for the raise looks like. Majority of it is community building, and a perfect kind of topic for what we're speaking about today. We've had the benefit of working with over 1,000 issuers, extremely active in the Reg A space, and just surpassed 700 million in Reg A investments. So really excited to be here today and chat with the team and dive into how you go about a capital raise and how you build and harbor community with these exercises.
Awesome. Thank you very much for that, Stormer. So I'd like to point out that we have two of the largest platforms that are enabling online capital formation. Republic is the largest in the world with your acquisition of Cedars and your other, operations that are in Asia and elsewhere. And Dalmore Group, I mean, that you guys went from 0 to 100 in the blink of the eye, and one of the largest Reg A plus enablers in the country. And I hope you guys go international too at some point in time. So thank you for being here. And Mike, you're doing something really, really cool and really, really important. So I'm very excited to hear from you. So raising money is difficult. Securities need to be sold, whether you're doing it in an analog basis or an online basis. That doesn't change. What online capital formation or securities crowdfunding has changed. It enables you to leverage the internet to sell or solicit investors from just about anywhere, depending on the exemption. But of course, it's not like a field of dreams. If they build it, they will come. I know everybody has the coolest concept in the world, but one of the hardest things you're ever going to do if you're an entrepreneur, you're running a startup, is raise money. It's like a full-time job within your job. So today we're going to start with, creating a community, and then how you leverage that community. And then I want to spend, a good amount of time on what you're doing post-funding round. So I'm going to start with you, Stormer. Securities crowdfunding, it's a lot of work. How important is it for an issuer to start with an existing community? Tell me.
Extremely important, extremely important. And I actually think, the conversation begins well before the need for capital. I always encourage having conversations with different providers as early as possible, so you know what the ability and what the opportunity looks like to tap into Reg CF or Reg A plus offerings. In summary, anyone over the age of 18, accredited and non-accredited investors can participate. So really, you're opening up this opportunity to those that historically don't have access to private investments. And when raising capital from the crowd, whether it's on a platform or a self-hosted model, who's going to be investing? Who's the target market here? And oftentimes there's an agency supporting the efforts to bring in additional eyes, but that first tranche of capital usually derives from the existing community of investors. And having that conversation early can start kind of changing the mindset to say, hey, I've got customers coming to my website or my business, they're interested in what I'm offering. I have to kind of start grooming them to the idea that maybe there's an investment opportunity in the future. And that's really where you're harboring community. You're taking your passionate customers and turning them into passionate stakeholders, and that can reap benefits so much further past the initial CF. So starting with an additional network or an initial network is crucial, and that can be small through friends and family. It doesn't need to be thousands and thousands of individuals. But it's going about this methodically, strategically, knowing that you're going to need multiple touch points with investors. You have to tell a story and make this compelling so that they want to join alongside the journey. So can't emphasize community enough. I think it's the epicenter of how you do an online capital raise. And there's so many different strategies you can go about to harbor that.
And having a social media presence is vital. I think we all know that. Facebook, Instagram, X, I'm sorry. Snap, whatever, right?
TikTok.
Yeah,
TikTok.
I would agree. I definitely would agree that social media is important, but it's not a crux. It's not going to be a make or break for an issuer. There's a lot of other models that you can reference. Webinars are a fantastic way to build community. And I think we all speak with founders on a weekly basis where I'm starting out, my social media is small. I've got, just a few hundred followers. That's okay. There's still a starting path for you in that type of structure, and community can be built outside of social media.
Okay, so that's a very good point. Abhi, an issuer doesn't have a well-established community. Now, you guys are a little bit different model than Dalmore Group because you guys have a marketplace model as well as private deal rooms. Somebody comes to you and they say, I've got the cure for cancer, but nobody knows who I am. And this is obviously a good idea. How do you tell them? I mean, what do they do? I mean, they've got to solicit people to back their company. I've read at times that, a third can come from your own like friends and family, a third from the platform, and then the third is just sweat equity. I don't know. At Republic, as one of the largest, how do you guys manage that?
Yeah, no, I mean, I think there's several components to it. So going back to the point, right, what Stormer was alluding to, like community, while it is crucial, right, not all businesses are community facing, right? So your standard B2B businesses or your healthcare businesses or your other focus industries that don't have that exact audience where your day-to-day average consumer will be your customer slash investor is not there. It makes it a little bit challenging, but that doesn't mean that you're not really cut out or your business is not cut out for establishing a community-based financing round. So the way that you always look at it is if the product is as strong or the business is as strong as it can be or has the potential to, be a multi-billion-dollar company or exceed exit expectations, you're always going to be a good fit for crowdfunding. The only importance really comes down to timing and really making sure that messaging is spread across as well together. So one of the attributes is every single company, right, regardless of if you're doing private raise or if you're going through a self-hosted platform or even going through Republic, you'd set up a deal page. And that deal page, the objective and the main idea is to drive the maximum number of eyeballs to that page and just to get that message very clearly across. So, in a similar sense, if you have the cure to cancer and if you're able to broadcast something along those lines, leveraging past case studies or results or trial data to showcase how valuable and how strong your technology is, which would grasp the eyeball of many others or, several medical professionals within the space. And even going back to your point, right, in order to get to that stage and obviously get to that point of contention and finding the cure, you've probably already raised capital in the past in some form of capacity, whether it's debt, whether it's through other medical professionals or other investment firms. And so it's leveraging those existing partners that you may have that have, shown prior success and helping them, kickstart your offering in itself, right? Driving that initial momentum. So the other investors are just more incentivized to come to your page, right? Seeing that traction, seeing that build up is very critical and helping drive that initial momentum to maximize your eyeballs. So while your audience is there, while our community is there, it's that if you could drive that initial momentum from your existing community, if you could have that leverage from your spokespeople or your early investors or help and get support from them, you can always leverage those resources without relying entirely on paid media and just marketing your own campaign in that way and simultaneously start building community alongside that. Eventually, the last thing I'll add is eventually in any form or short form or not, once a company crosses a certain size, the end individual will always be a consumer, right? If you think Salesforce, if you even think Ozempic, for example, right? There's in the healthcare space, the end individuals will always be that consumer. So you just want to make sure you can get to that point where the individual will eventually know the brand itself, and then leverage even more community-based financing at that later date.
Awesome. Okay, that makes a lot of sense to me. Dawson, you guys are more self-hosted. If somebody comes to you and says, "I've got a great business opportunity, but I really don't have a community," how does that conversation go? What are you telling them?
Yeah, absolutely. Great question. And it's one that we get often. I think, a lot of times people think of growing a community as either very, very expensive or time consuming, or they're going to have to hire, a full agency to come in and do it for them. And I think there's a lot of different little things that you can do to grow a community along the way as you're preparing to launch an offering. So, for example, let's just call it, the Dream 100 list of, you make a list of 100 podcasts, 100 blogs, 100, newsletters. Try to find your way into some of those different avenues to just start getting your name out there, start, basically perfecting your pitch and your message. There's a lot of ways that you can get into some of those different podcasts or blogs by just doing guest articles or guest interviews. A lot of these different platforms are looking for content on different subject matters or different industries. So, there's a lot of ways that you could get your foot in the door and start growing your own community and either pushing that to your social media or, better yet, in my opinion, pushing it to your own email newsletter that you control everything about. You're not worried about social media algorithms or potentially getting shut down if you're a high risk issuer. So, I would say the more that you can grow your own list, it's really like you're creating your own distribution list for when you do go live. And so I think that has to be something that you're thinking about not only during the raise, but prior to even, filing or getting ready to go into the raise, is how can you get in front of the largest audience possible, but then how can you draw them in? And once again, it has to be about how can you add value to them, and how can you provide a message that does provide some level of impact to them, that's going to draw them in and have them opt in. So all that being said, I think there's different ways that you could start growing a community today versus waiting till you're paying for ad spend to try to grow that or go a different way about it.
I'm going to first jump over to Mike because you've been sitting there patiently, thinking about things, and I want to see if you have anything to add for the importance of having an established community before you launch a securities offering. And you have like a long history in capital markets, financial services firms, which, really you come from an old school and you're doing new school stuff. So I'd love to hear your perspective on that if you have something to share.
I mean, I guess I just agree with everybody else. I think it's extremely challenging if you don't have your own community. And I think one of the things I'd be curious what the other panelists have to say about is marketing costs and how much should a company without a big following expect to spend and how much is reasonable. And I think some companies spend a lot of money on marketing because they don't realize how important that initial community is. And I'm not sure it doesn't make some of these offerings very expensive because of the spend there. But yeah, I think it's
okay.
It's very important.
So I think that's a good question. And that was actually part of my next question. So I'm going to jump over to Abby and stick you with this one because when I look at, offerings online, frequently I can tell that they've engaged a marketing firm, a PR firm. Some platforms have in-house teams to help people do this. How important is that? And after you get to that, I want to hear what you're seeing in the cost. And I'm going to ask the same question to the Dalmore crew after you share your information. So let me know.
Yeah, absolutely. I think there's two sides for it on my end, right? I think running performance marketing or any type of marketing is helpful and beneficial in the capacity of driving individuals to your page or individuals to your offering in itself. But I think doing so at a critical time, and the right time, I should say, is quite important. On Republic itself, most offerings are typically running for about 60 to 90 days. And in a very similar sense, you don't necessarily want to run a performance marketing campaign when you don't have that initial capital already funneled through the door. The best analogy I always use is, if you're walking by an empty restaurant and you're walking by a crowded restaurant, which one do you think is a little bit more better, or which one is more favored by the general population? And in a similar sense, if you're running paid ads at, when you have, let's say, $0 or $5,000 or $10,000 into your offering in itself, you're not really maximizing the effect and the ability to drive those individuals to your offering because they're not seeing that same effect that they would see when there's several other, thousands or hundreds of thousands of dollars that are already towards the offering in itself. And then and you were going to say something, Andrew, but I'll let you ask. I was going to say,
all right.
Yeah.
Go ahead.
What I was going to say after was, I think a good return on ad spend in itself, when you're anticipating and going out to spend an offering, is anywhere north of 3 to 4x on what you're spending to get out. Typically, what we're seeing, and when we're speaking with a lot of agencies itself, is that most companies should anticipate having a $10,000 to $20,000 budget based on what they're targeting and what they're seeking to reach. But obviously, if you're looking at eclipsing $1 million or $5 million offering, and you don't necessarily have a massive community established, and you don't necessarily have the resources to drive that initial capital, a higher budget will probably be necessary to get the maximum number of eyeballs driven to your offering.
Okay, so and that's an important point because, in effect, that investment is going to be spent by promoting the offering, and so I guess you get what you paid for. So you're saying $10K to $20K, but it goes higher if you're raising more money, say in a CF offering, $1 million to $5 million. You want to dedicate a little bit more. What about a Reg A Plus securities offering that's trying to raise 10 or 20 million? And I see those, they typically run longer. I mean, you'll see 3, 6 months, sometimes a year. What type of budget are you seeing for these larger offerings?
Yeah, typically speaking, we're seeing budgets north of $1 million when you're looking at these super, large offerings that are typically targeting north of that 5 million range on the Reg A plus side, anywhere from $1 million to even higher if you're going upwards of that 50 to 75 million. I mean, I've seen an issuer that had a $25 million budget, and they were aiming to target a $75 million raise. I think when you look at crowdfunding in itself, right, or equity crowdfunding as a component, it's very critical to understand that there's two sides to it, right? Well, the first side is customer acquisition. So the marketing is not only going to drive investment volume to the offering in itself, but it's also a form of customer and user acquisition. So individuals are getting familiar with your platform and the business as a whole. So it is a multi-pronged benefit, generally speaking, when you are running that component of ad spend. And then the second side, and hopefully the added benefit, is that naturally these individuals would also become investors, but more likely so, they're effectively going to be your army, right? They're the ones that are going to go out and promote it to their friends, their community, their family, and as such, hopefully that dollar does go beyond the reach of just investment capital.
Okay, so I'm going to jump over. Yeah, I'll get to you in a second, Mike, because I want to make certain that you're getting your questions because you have some good ones here. But I want to jump over to Stormer very quickly. From your point of view, and I know one of the things that you emphasize at Dalmore Group is that all the data that is garnered from a securities offering, the issuer gets to keep, and they can leverage that again and again and again. And I think that's very important. But what are you seeing out there when somebody says, "Hey, I want to raise $20 million using your tech stack"? Are you saying, "Hey guys, you need to hire a marketing firm. It's going to cost you this much"? Or you say, "Hey guys, we can help you do this because you have this foundational support and you don't need to do that"? How does that conversation go for Dalmore issuers? Stormer, explain that to me.
Good question. So, there's a few schools of thought, and I think part of the benefit of doing a self-hosted offering is all of those resources, all of that marketing capital is actually landing on your own domain, which kind of accelerates the emphasis of capturing information of your customers, targeting them for your product and your business outside of the capital needs. And so, when we're having conversations with issuers, especially targeting the $75 million range, you have to go about it strategic, you have to be methodical, and it's all about optimizing, scaling, and then deploying what's actually working. And so, what we say is, look, you have to find that culture fit with an agency, whether you have agencies in-house or, looking externally. And it really resolves around who's performing and what's performing. So that paid ad spend can be significant. I mean, we have some issuers spending, 6 figures a month to drive that activity, and the returns are there. They're not spending that frivolously. They're doing it because the model's working. And every issuer is unique, right? We have many perpetual issuers. They may have a fund or a REIT, where it's not like we're raising operating capital for our Series A. We're raising a fund, and that fund is going to pay a dividend or a yield. So there's reasons to kind of recycle that capital into marketing spend. What we try and do is be very consultative, very much act as a consultant in a way of guiding these issuers towards what's going to be successful or how we can best position them for success, and then optimizing and scaling. That's really the goal. So start out slow, have a budget, for a Reg A, 6 figures. You should definitely have 6 figures available in marketing, not immediately, but so that you can slowly deploy, see what's working. And if you're getting the return on ad spend that you're looking for, you can recycle that capital. And I think in the online fundraising space, most platforms, ourselves included, allow for rolling closes. So every 30 days, you can draw capital from the raise and deploy into the venture or into the business. And that's that opportunity to have additional funds for marketing efforts. And so it's not a turnkey solution. You have to go about this methodically. You have to have a strategy going into the offering. And that's where we try and provide a lot of value to our issuers, because this is an ongoing process for companies.
Okay. All right. I think that's fair. It costs a lot of money, takes a lot of effort. You may want to hire a marketing firm. Honestly, there are some good ones out there. There's some that really suck. So I would advise some people to be very cautious as to who they hire, because they all tell you that they can create magic, but few can. Mike, did you asked a really good question. cost. I think it's really important. Was there something else that you wanted to point out there?
I just was curious, real quick, I don't want to get off topic here, but for Reg D offerings where you're just marketing to accredited investors, do you see the marketing spend a lot lower? Just out of curiosity.
Abby, I mean, you guys have a private deal room.
Yeah, definitely a lot lower. Assuming that it is a 506c and they are, going down the investor solicitation route, but it is definitely a lot lower. Generally speaking, because, they are targeting more family offices or high net worth individuals, and the marketing or the paid media that's generally going out is not really targeting that audience quite as well as you will see with the retail audience. So it is definitely a lot lower, but to say that there are still certain companies that do it and they do have some budgets, but I would say not nearly as high as you would see with a Reg A or even a Reg CF offering in itself. With the exception, I will say the only ones similar to enough are when it's REITs or fund type structures where there are dividends or distributions or pass through tax losses or anything of that sort, where it may benefit the accredited investor substantially because of tax write-offs or any other components later down the line.
Makes sense.
Yeah, thanks. That's interesting. I'm going to ask all of you about TTW, testing the waters. Now, when this first, emerged, the industry back in the day, a long time ago, they were very excited about this. So TTW, testing the waters, allows an issuer to go out and solicit indications of interest. How interested are you in supporting a securities offering? If I do it, you don't have to really file anything to pursue this path. So it's a cost-effective way to gauge the market. And so everybody was very excited about that. And eventually it went from, Reg A and Reg CF were both incorporated in that TTW realm. At first, when I first watched this, people saw that it wasn't very sticky, and that people would say, yes, I'm going to invest $10,000, and then they wouldn't invest anything. I think since then, platforms have altered their strategy to a more effective path. And I'm going to ask you, Dawson, how do you guys manage that specifically for issuers who want to TTW before they go live? Do you guys enable this?
Yeah, absolutely. And it's a great question. I think it's one of those pieces that I think a lot of issuers are still maybe unaware of or don't maybe fully understand the process and the opportunity. There's a lot of issuers, that I talk to either on the technology or marketing side that I mentioned test the waters, and they're asking, okay, can you tell me more about that? I don't fully understand. So I think there's a lot of education that all of us as platforms, companies, industry, needs to do a better job of educating issuers on this subject, because I do think it is really important in terms of, for example, I was listening to a podcast, a couple of weeks ago. If anyone's familiar with the Bucket List family, they, have a massive following. And he talked about on that podcast how, now he didn't know what it was called. He didn't know it was Test the Waters per se, but he knew that crowdfunding had just become available. He knew that he could do this thing, that was Test the Waters, send it out to their list. And within like 24 hours had $43 million, committed in capital. Now, that's an extreme version. They had a massive community. But the interesting thing about that is, what did that tell him? Like, okay, our community, our, people that follow us on social media would actually put money, $100, $200, to support us and to, go for our cause. And so I think it's one of those things that, on the marketing side, we've also seen the negative side of it. If you do that too early and you have 60, 90, 120 days between the time you said, someone said they were going to invest and now you're live, there's a lot of life that's happened between that period. And they might have already invested in another, opportunity that came along. Maybe they don't have that money available anymore. So there is a timing issue there that you have to be really sensitive to make sure you hit the right spot. But yeah, absolutely. I think it's a very important piece of the puzzle especially for folks that just want to see, is crowdfunding right for me? Especially if you have a community, be able to test the waters and see, okay, yeah, we've got a pretty good, size group that wants to invest. Let's go down this path before you get started spending X amount on filing and marketing and all these other pieces. It gives you a bridge to see if it is the right direction to go.
Stormer, how often do you see somebody that kind
Yeah.
of fails? You know, that they do the TTW, they don't get the interest, and they say, okay, we're going to do something else. Is that something you see often or not so much?
I see it for sure. And I think stopping the test the waters is the failure of the process, because test the waters is an evergreen experience. You're casting your interests or casting the opportunity for your customers and your community to show interest in your opportunity. When you send one email with a survey and you get a few responses, that shouldn't be definitive of the ability to raise capital from your community. This should be something that's ongoing, quarterly, annually, reaching out to your audience and saying, look, you love our product, you love our services. In the future, if we had an offering, would you participate? And that over time, the earlier you can start that process and have a sense as to, or a pulse as to what your audience looks like, is only going to reap benefits in the future. I personally think test the waters is an untapped catalyst for the entire online fundraising ecosystem. I mean, there's 30 million private companies, 1,500 are leveraging these exemptions to raise capital, and there's a barrier to actually do a CF, upfront costs, marketing spend. But why can't every company at least gauge the interest of their community to move in that direction at some point in the next year, 2 years, 3 years? And so I think there's a huge opportunity with Test the Waters. It's been tested by different companies. Not all have, put the resources and energy into it. And I think issuers, companies need a clear path to experience and understand what Test the Waters is all about. It's,
Okay.
I think it's a huge opportunity.
Okay, awesome. Avi, doesn't Republic do a lot of like pre-funding before it goes public? I mean, that's kind of like a strategy that I see utilized with greater frequency. How does that work?
Yeah, in a similar sense, a lot of companies would come to us and, before they go live, they would like to at least have 50,000 or 100,000 within the front door before they're going live. So they'd like to open it to their community or individuals within their network, right around the time of launch, before it's a fully public-facing offering, and allow them to participate just so they can drive that initial momentum and traction in a similar sense. But very similarly, so I think one of the biggest challenges that a lot of companies have faced is their initial momentum is not kept throughout the whole process of their offering, or even when they are going down the route of testing the waters initially early on, that they started off strong, they started off hot, but they saw that ultimately at a specific point in time there wasn't the continued excitement and engagement that really followed throughout the duration. So there wasn't that momentum that drove it to, once their offering went live, those investors, or reservations, I should say, actually converted into actual commitments. I think it's very similar to that example of, when Tesla came out with the Cybertruck, right? Everyone is super excited to make a reservation and put down their, $500 deposit to reserve one of those cars. But once they actually hit the market and then they realize the actual cost of it, they're like, okay, wait, let me think about it. I probably spent that money, or I could spend that money in better, different ways in a, another format. So in a similar sense,
I didn't put a deposit down for that.
Yeah, exactly. See, and I don't know if you own one today or not, but and ultimately speaking, it's really ensuring that you're keeping that momentum and driving that effectively that vehicle to continue saying, hey, this is why you should invest in us, and this is it. And then sort of even going back to that main question you said is that having those pre-lined up capital investments immediately starts off that momentum. With the one thing I'll say is, obviously, Republic as a marketplace and not a self-hosted platform, most of these offerings are only running for 60 to 90 days. So you want to capture that momentum while it's hot and strike that. And usually you'll see the first 2 weeks and the last 2 weeks are the most strongest. So just preparing and gearing up for that little slower period to drive that momentum and capture it throughout the duration of the race is critical.
Okay. Mike, you're a professional investor, and plus, you've been doing this for a really long time. How important is it for an issuer to start with momentum, and how important is it to keep that momentum going to drive a successful funding round? I mean, this holds true whether you're an investment banker out there pounding the table and doing a roadshow, or you're doing an online funding round, isn't it?
Yeah, I mean, especially in the retail space, people just feel better when there are other people, involved. It's like the restaurant example you gave. if you go to one restaurant's full and the one next door is empty, you're sort of like, oh, the food must not be very good there. So I do think it makes a lot of sense to, obviously launch a campaign with significant following. And honestly, the same thing is true in the institutional space. Once a deal becomes hot, then it's like everybody who wasn't going to be in just sort of piles in. And so there's a lot of that sort of lending behavior and investments. And, you see
It's
that
a,
in momentum investing in the public
it's
market.
it's the herd theory. You're right. I mean, you see it
Yeah.
in both public and private markets, and it's the psychology involved with, like, building, leveraging, and utilizing your community, and it's very very important. So how important is it once you have these people that have committed their funds, they've said, look, I'm going to put $5,000 into the securities offering. What are issuers doing to get them to go out and be an ambassador, be a promoter of the offering? What are you guys seeing today that once you have somebody dedicated and committed to your offering, what are issuers doing to encourage these people to be your extended salespeople? Abhi, you want to start?
Yeah, the biggest thing, and so I think the difference between the good issuers and the ones that fail at this are the ones that really do provide updates on a regular cadence to their investor audience. I mean, typically what we encourage to the issuers that do raise with us is, in a general sense, of any update that you'd provide to your strategic investors or your high net worth or your accredited, think of these investors in a similar sense. Your strategics are always going to be the ones that are going to open doors for you. They may get you, if you're a CPG brand, they may get you into Walmart, or they may get you into these different components. Versus your retail investors are going to be your army. So by continuously providing them updates and hopefully positive, they're just going to get more and more excited naturally by course and action. I think to use specific examples in itself, I mean, we've had issuers that may have launched new products, and they may have launched, or seeking, access or intros to other individuals within their network, and they've actually relied on the forum of their crowdfunding raise to say, hey, would anyone like to test the products and be the first ones to review it, or would anyone like to be able to connect us to this specific audience? And the retail investors really do love that, because they do feel like they're actually a part of the business. They're getting those quarterly updates, they're getting those monthly updates, and they're actually able to drive that course and direction and change of where the business is scaling and growing. So the ones that do provide those quarterly updates, we are seeing that there's a substantially a lot more engagement. And it's as simple as, hey, a social media following, promoting it, sharing it with your friends. The more customers you refer, the more dollars you can earn, and really follow the methodology.
Yeah, I mean, radio silence is about the worst thing you can ever do when you're raising money online. I will say this, though, is I think that anytime there's a securities offering that you have a known or named investor, professional investor that's participating in the same funding round, hopefully at the exact same terms, I think that's a strong signal that the company has a chance. There's a viable product or service that's in the queue, and I look for that. If I see a named person, that's important to me. And then at the same time, the communication, back and forth on an offering page, I always read that. I'll skip everything else at the top except for the pictures and the bullets, and I'll go straight to what are people saying about this, because frequently I learn things there that I would not learn otherwise. So I love that as an outsider. So Mike,
Andrew, if I may, you actually brought up something that was quite interesting there real quick, was when you said about the same terms versus the strategics and not. If I may just add one quick thing on that, I think that's
please.
super important for founders in considering this. Right? A lot of companies come to the crowd thinking that it's a great resource to increase their valuation, or it's a great way to extend those terms of their offering. And I think it's very critical for companies to understand that, raising from the crowd, you should always match the terms of your strategic investor, assuming it's part of the same round, because ultimately speaking, it's your customers, your consumers, and your friends and family that are going to participate in the round. So the only individuals that are really going to get pissed off or upset are your friends and family and your customers. And you really do want to keep them happy as you are raising follow-on, financing. So I just wanted to toss that out there, because it is a point of contention that we get quite often. and it's something that I think is very important when you explain it to them like that.
100%. If it's the same funding round, it should be the same or nearly the same terms. I get it if you got somebody who's putting in $1 million, but I think that's vital. You don't want to screw the little guy because that's a bad look, isn't it, Mike? So we finished a funding round. And like I said before, the worst thing you can do is go totally silent. Like the ICO days where it was frequently a rug pull. They'd raise the money and then you'd see them in Ibiza, and that's a bad look too. So it's very important that you communicate with the people that have dedicated their hard-earned money into your company, and this is your specialty, Mike. And I think it's something, in all honesty, that too many platforms or players in this space are not doing as good a job as they can do. So, what do you guys think is important for communication process post funding round?
Well, I think that there's an issue of the founder gets their money and now they want to get to running their company. And a lot of founders are just completely buried with a lot of different things, and so they just don't really think about it. And it's important to communicate with all of your investors, because the most likely investor in your next round is going to be a happy investor from your previous round.
Right.
And if you're not taking care of those people and updating them and being radio silent, then they may invest, but they're less likely to invest. And it even goes beyond the next round. It could be your next venture. Right? How about you have 5,000 people that were in your previous company and it failed for some reason that maybe is a good reason, but the opportunity to reach out to people who were involved before will depend, or your success will depend on whether they felt like you were a responsible founder and communicated with them. And I don't understand why the founders don't understand the importance of this, because we see just a lot of lack of communication, and the whole failure to file the annual report with the SEC for Reg CF issuers is mind-blowing. It's over 50% of the issuers, I think, don't file their annual report, which is required by the SEC. And you should at least be updating your investors once a year. I think if you have professional investors involved, whether it's large accredited investors or VC funds, they're going to force you to put out these quarterly or maybe even monthly reports. And obviously you should just be passing that on to everybody. So we think it's important, and we think that for whatever reason, founders aren't paying enough attention to that or appreciating the value of it. And I think in many cases, because the founder is so busy, they just need someone to say, hey, you haven't done anything in 2 months. And I know some of the platforms do, and maybe you guys all do that, but reminding them that you haven't posted an update, or you haven't done this. And so we've basically built a portal that allows people to do that and sets up reminders, and it says, hey, you haven't had a call in 9 months, and just prompts them to do that. Nothing that's really rocket science. And for some of the issuers who have done raises on multiple platforms, it's a little difficult too, because now they have to go to 3 different platforms and post an update on their page on 3 different platforms. And so it is a little bit burdensome for the founders, but I think it's something that they're just not understanding the value of keeping those communication lines open.
Yeah, absolutely. And I get it that if you're running an early stage firm, you're buried, you're juggling a lot of things, you're working super long days, 7 days a week. It's really freaking hard. And so it's not always a priority thing. But as you told me, Mike, investors deserve this. And when I go to, certain unnamed, offering pages, and I start reading the comments on there, and somebody says, gee, this is their second round. This is the first time I've heard anything from them since they raised money last time. I'm like, okay, that's a big, black mark for these guys. And I think other people react the same way, and I find that community aspect, from an outsider's perspective of the discussion back and forth. And some issuers are great because you'll see the founder or somebody's working there having a discussion, answering tough questions. That I love to see.
I like to call the retail investor Aunt Molly, and my view is that Aunt Molly deserves better, right? Aunt Molly put her $500 in, and she deserves to be, kept up to date. And, it just needs to be done through some efficient manner. And if you look at public companies, they all have investor relations companies that deal with it, or certainly an investor relations page. And so, there are things that issuers can do to make sure they're keeping people informed, and I think they should do a better job of it.
Yeah, absolutely. And sometimes, the smallest investor is the one that gets a short change. But, if you're online, it's a lot easier to communicate with everybody. And as you guys are saying, the happy investor is going to be the first person that'll invest in your next funding round. And that's how this ecosystem is evolving. You're doing, your series C or A, and then you want to do a B, C, D. You want to be a series issuer, or if you're doing a REIT or some sort of unique product that you want to come and hit the market again and again and again. You got to keep these people happy. Isn't that right, Stormer?
Absolutely. Yeah, I couldn't agree more. I don't think there's an excuse for lack of communication. I mean, we live in a world where AI is referenced every other day and every other hour, and there's so many tools to, send mass communication. Now, some of the best examples of communication that I've seen following an offering is a 2-sentence email from the CEO to the investor saying, "Thanks so much. Can't wait for you to be a part of this journey." You get a response, and maybe just a thank you in return. But that's that open line of communication. And I think if you were to remove fundraising from this equation, any entrepreneur would die to have a first level connection with 1,000 customers, right? The ability to ask questions, A/B test products. And that's what you're getting out of this benefit of doing an online offering. You're getting the fundraising efforts, you're getting the brand recognition, but now you have access to customers that are going to give you such valuable insight into whatever your venture is. And I think there's 2 schools of thought. There's the burden. I don't have time to manage 1,000 investors. And then there's the opportunity. And it's the founders that look at this as an opportunity that are the successful ones. And so again, emphasis on communication. It can be quarterly. It doesn't have to be robust. It can be the same newsletter you send to the strategics. Just keeping that line of communication open is going to open doors in the future.
Awesome. And Avi, I'm going to, Cedars, I don't know how much you interact with those guys, but it's a UK-based platform that operates across Europe. I love their page that kind of outlines everything. That's makes things so easy for me when I want to check and see, what's going on. There's some of the stuff that you have to be registered to get access to, but in the early days of this industry, too many platforms were like, okay, this one sucked, so we're just going to delete it. That's wrong. That's bad. Not everything's going to be a home run. We get it. That's capitalism. That's a market economy. That's how things should work. But I love that how the many platforms today are migrating to keeping the information in a central location so you can see what's going on. It's so helpful. So somebody mentioned, I think it was Mike you mentioned, but I'm going to give this one to Dawson. Certain securities exemptions require you to file documents. And Mike, you mentioned Reg CF and the fact that the Form C-AR, people are not filing that. The SEC is aware of it, but they have more important things to do. I get it. Beyond Reg C, Dawson, Reg A, can you explain the requirements for issuers that utilize this exemption?
I can't, and I would point you to your securities attorney to make sure that you're doing it correctly.
Yes.
So I'm more in the technology and marketing side. I'm not even going to speak to that so that I don't misspeak. But Stormer, if you want to take that one,
good jump in, Stormer. Yeah,
better handle.
Yeah, and I mean that's really part of the value add that we provide to issuers is being that kind of guiding light to successfully launching your offering, which can for a Reg A can be 2 to 6 months. And then the activity that happens during a Reg A, that marketing contact, that webinar strategy, and then what comes after the raise. And of course, largely on the hands of the founder to manage post-offering life. But there are requirements that come along with it. Audited financials being one of them. Annual reporting. Those are all things that are prudent to a capital raise. That's ultimately though where legal counsel should be that spokesperson and that resource for you. To be best positioned to make sure you're hitting these milestones, properly reporting, and keeping the business in good standing.
Yeah, absolutely. And Mike, I mean, if you don't follow that Form C-AR annual report, you're out of compliance, right? You can't do another funding round, an online capital formation project, right?
Yeah, I mean, there's people out there who seem to think that that's the only issue is that you can't do another round. But it's actually a required filing, and it's, you know, the SEC hasn't done anything about it, so nobody's worried about it, and nobody probably will be worried about it until the SEC does do something. But it actually is a requirement, and you know, we've spoken with some legal counsel about this, and you know, part of the Form C basically says that you'll comply with the rules, and now you're not complying with the rules. And there's some lawyers who say that that's a potential fraud case against the founder, because they basically represented they're going to do something and now they're not doing it. And if they're intentionally not doing it, then, you know, so there's issues with it. And again, I don't think anything is going to change until one of two things happens. One, founders care that their investors want to get at least an annual update. That's not a big ask. And two, the SEC does something about it. And, you know, I think at some point they will, because there's enough Aunt Mollies who are in this space now that, you know, that I think that the rules should be followed. And when they passed the Jobs Act, they decided, well, let's at least make people once a year update investors. And so, you know, that's something it's not that challenging to do. It might take you an afternoon to do your annual report, but not much more than that.
Yeah, no, I think that you're spot on. I think the SEC is going to do something. I think it's going to be scaled. They went after 11 Reg A issuers who had, you know, various foot faults and errors. They weren't necessarily egregious, but it was kind of a shot across the bow. At least that was my interpretation. It was a shot across the bow. Hey guys, take this stuff seriously. You know, you're selling, you know, securities to the public. You've got to adhere to the rules. And I think it could happen. And I think in a way maybe it should, because you're right, Mike. It's not that big of a deal. It's not that difficult to do, but too many people are ignoring that. Abby, very quickly, I want to ask you a question. Is this just evolving into like the new investment banking ecosystem for everything? Is because, you know, it's kind of soup to nuts, everything for securities management, issuance, trading, management. Is that where we're going with all this?
Yeah, at least I think so, right? I think the intention is that, you know, people are sort of you know, frustrated with the process of capital raising, and they have to go through multiple different stages and multiple different channels or multiple different groups, and not having the ability to rely on one partner to be able to complete from everything from start to finish, right? Where it's your initial capital formation raise, and then ultimately you can work with a group to help them take them public, right? And you know, go down that path. And so I think the way that the industry is going to trend in the next upcoming years is you're going to start seeing a lot of these issuers, hopefully ones that are successful and that are coming back to do more capital raises, that start targeting you know, larger platforms that can help facilitate more than just one transaction and take them down a path to, you know, different components. I'm curious actually myself with you guys at Dalmore and so on, but if you guys are starting to even see issuers come and ask questions about secondary trading, right? Or going down the path of, are there other liquidation opportunities later down the line for our investors? And it's something that we're starting to see a little bit more frequently on our side, given that the industry has now been involved for, you know, roughly 8 years. And I think as retail investors, they want to see liquidity at some point, and they want that opportunity of seeing that. So, you know, having that course, right, whether it's you run a CF, then you go to the broker dealer, then you do a Reg A, and then you go public, or it's, you know, you do a future fundraising round, or you find alternative sources of liquidation and going down that path as a potential liability. But it is something that we're starting to see more often.
Yeah. Okay. So I'm going to switch over to questions very quickly because we're running out of time here. Here's one. We're a pre-revenue startup. How can we build trust and excitement with investors through our online community before we have a track record of success? I'm going to start with you, Stormer. You got any thoughts on that?
Yeah, I think a perfect starting point would be test the waters, right? And, you know, we could be that support system for you to kind of guide you as to what a TTW would look like. Start fielding interest from your customers, and that can be 100 individuals. That's how you're going to build excitement. It's going to how you're going to build trust, and then maybe it's next quarter, maybe it's 3 quarters, maybe it's beyond. You launch that offering, and now you've got an audience that's excited behind what you're up to.
Okay, that makes a lot of sense to me. Mike, here's what: how do you avoid information overload and maintain a healthy communication cadence? With the investment community, I think that that's valid. You want to give them the information they need, not every single thing that happens during the day.
I
What
mean,
are your
I
thoughts
think
on
a quarterly report is suitable for most companies, and it doesn't need to be more than 2 pages. People just want to know, here's what's going on, and here are the things that have happened. And importantly, people want to know if things aren't going well too. Founders communicate even less when things are going poorly. But I think that communication is, deserved, but it doesn't need to be long or comprehensive. It just really needs to give people a sense on here's what's going on in the business. That's my thought.
And it needs to be accurate, right? Legally compliant. Here's an interesting one. I'm looking to form a fund to raise money first and then buy existing profitable businesses. You really can't do that with Reg CF. Um, you can do that with Reg D. I don't know. Abby, you guys doing any of that? I don't think I've seen anything like that. Am I missing something?
Yeah, at least on the Reg CF side, we're obviously not, because most likely you'd fall within the Investment Company Act. So, in theory, we won't see it as often. I would say we really don't see it that common with our broker dealer team as well. It's not something that is quite frequent, unless for some reason you've had a successful track record. Interestingly enough, it is actually quite common in the UK. On our side, we do have a funds product where companies will, not individuals, go ahead and raise a fund and then will deploy and either buy assets or businesses. But it's not common here in the US, especially at this path.
Yeah, awesome. So we're really out of time here. I'm going to give you guys each an opportunity to give some final words about the importance of community. I'm going to start with you, Mike, because I think you're covering a part of the offering process that needs more emphasis.
Well, I mean, I think, look, a lot of good things were talked about today, and it's obviously important to have a community and nurture that before you do a raise. But I think that it's important that founders don't forget to do that after they do a raise too, for all the reasons we sort of talked about today. So just maintaining that. People are used to communicating with their followers or customers. They need to get used to how to communicate with investors too once they do a raise. And I think it's an important aspect of being successful in the long run.
Absolutely. Dawson?
Yeah, I mean, I think one of the interesting things to look at is the groups that have been very, very successful in crowdfunding. Go look at their investor Facebook group pages. I mean, these investors, this community has created its own system of keeping each other updated. They're buying merch and wearing merch of the company. So I think that really goes down to the bottom line of it has to be a great product or a great investment opportunity to start with. So if you don't have a great product, the community is going to stem from that. So I think, you look at the ones that have been successful and look at those Facebook groups. They're excited. They're excited about any type of update talking about investor communication. They're excited, even guessing what could be potentially happening. So I think, absolutely community is a huge part of it. But going back to the beginning of pre-raise, there's a lot of ways you can start doing that today without spending, X amount on ad spend and getting the word out about your company and growing your email list so that you can continue to build your own distribution list when it's time to go live. So yeah, that'd be the only thing. It's just, treat your community like you'd want to treat, your customer, and just know that they might be both. They might be both investors and customers that you're working with.
Absolutely. Stormer?
Yeah, I think it's been very well summarized across the group. Emphasizing communication. It can be as simple as setting a calendar reminder every quarter to send out, a half-hour email to your network. Doesn't have to be a daunting task. I look at this as an opportunity for founders, and that's really what stems from success, is the opportunity of bringing on a network of investors.
Very good. Abby?
Yeah, I won't beat around the bush, and I'll echo exactly what everyone else said. But the one thing I will say to add to it is there's a lot of free resources out there, right? You don't need to rely on paid media to build out a community. And, whether it's, close friends and family, as well as leveraging, other individuals to help you out, and, social media. But building that community early on will really build that strong audience and that foundation to help you scale the business. Sort of like the chicken and the egg scenario when you go to a VC, or they want traction, they want numbers. Well, building that community will help get you there. So doing a crowd raise complementary to a traditional round or along those lines is very important and critical. And so your foundation, your community is everything, but treat them well, and they'll give you the same respect back.
Treat your investors well. Then on that, we're gonna end this webinar today. I want to thank everybody who joined us. I apologize for the technical difficulties we had midstream, but I do hope everybody joins us. I think we're coming back in July. We're working on a really cool topic. Everybody who's participating today, please reach out to them on social media, ask them questions, send me a note. I love to get feedback, and we look forward to seeing everybody soon. So thank you very much.
Great. Thank you.
Thanks, everyone.
Appreciate the time. Bye.